Hey guys, welcome back to Reserved Investments on YouTube, and welcome to part 4 of my 6,000 subscriber Q&A series. Rest assured, there is going to be a part 5, and there most likely will be a part 6. So we're going to take a deep dive because we got a lot of questions to get to. First question, Sean, as you know, some people can't afford a 9.8 or even a 9.6 and sometimes even a 9.4 condition comic book when we talk about investing in vintage graded comic books. Would you say that it would be a good idea for someone to get a low grade CGC graded vintage comic book for the short term gain? Thank you for the great videos. Hope my question makes sense. If you think that particular comic book or the popularity of the character that is coming or being presented in that comic book is going to continue to rise, then yes. You know, right now, I have a lot of people that really take issue with some of the commentary I provide on the overall graded comic book marketplace because they claim, Sean, you keep talking about optimal collecting grade. Or Sean, you tell people not to invest in some of these markets. Well, my copy of Amazing Spider-Man 129 in CGC 7.0 condition has been rising exponentially. Or, Sean, my copy of Amazing Spider-Man 300 in 9.4 condition has gone up X number of percent in the last few years. How can you tell me it's not investment grade? And how can you tell people not to invest in this market? Well, this is what I say to all my critics. In the middle of a bull market, everybody's a genius. I mean, if you bought a copy of Giant Size X-Men 1 in CGC 9.4 condition and you bought it literally 3 years ago and you paid what? $3,000 for that book? Today you look like a rocket scientist because that book is now worth $12,000. So I have no problem if you want to try to invest in lower grade CGC comic books because you're not financially established or you're just starting out and you can't afford paying $4, $5, $6, $7, $8, $9, in some cases $10,000 or more for a 9.4 key or a 9.6 or a 9.8. The problem is, just remember, over a long enough time horizon, the books that appreciate and value the most, all things being equal, are the higher grades. That's why when I do more videos going inside the talking point of optimal collecting grades, you guys are going to see that when I show you the price appreciation of certain books in 9.4 or 9.6 or 9.8 condition versus that of a 7.0 or an 8.0 or even a 9.0 comic book, the books on the overall higher end of the spectrum have the most appreciation. Now, right now, all these books are in a bull market. So what I will tell you is, if you are going after lower grade keys, especially of Bronze Age issues, maybe certain Copper Age issues, meaning books that are not Amazing Fantasy 15 or X-Men 1. I'm not talking any of the major Silver Age keys. I'm talking if you're going to go after like a 7.0 Amazing Spider-Man 129, just make sure you analyze the market properly. Because if that market corrects, it's going to be the people that are holding the lower value books that are also going to lose. It's not just going to be the people that paid a premium for a 9.6 or a 9.8 copy of Amazing Spider-Man 129. In my opinion, I've said this before, that book is anything but rare. It's just one of the most popular Bronze Age books out there. Well, if there's a market correction, what does that mean? You think all the books that are noted as major Bronze Age keys are going to be exempt from a market correction? The answer is no. I can prove to other collecting categories that got hit with a correction, and literally the key books or the key items in that collecting category, they were the first to fall in value. So be very careful with how you assess the market if you're going after books like this. And I will tell you, avoid the hype. Smart investors sell into the hype. They do not buy into the hype. I've said this before. Right now is a very bad time to buy books like Tomb of Dracula 10, first appearance of Blade, and Werewolf by Night 32, first appearance of Moon Knight. Be very careful if you're going after a 7.0, a 7.5, or even a 9.4 copy of those books. I really think the market is going to eventually turn on those books because there's a lot out there. It's just a lot of the Timmies, Kimmies, and Poindexters are trying to invest in those books at present time. Next question. Sean, I would love to hear your estimates on the total number of collectors in various markets. I have no clue. How many people collect sports cards compared to how many people collect video games? Or how many times larger is one market over the other? For sellers, what is their max customer base? Well, first of all, it's very hard to predict how many collectors are operating in a market at any given time. Let's be honest. Like me, I collect coins and currency, but I also collect comics. So I'm a cross collector in those markets. Now, this is important because there's something called market cap. One of the largest collecting categories out there, and I know some of you are going to hate me for stating this, is investment grade coins. The market cap for rare investment grade coins is estimated to be at $3.5 billion to $4 billion per year. That's the turnover figure that professionals in the trade use. I can tell you right now, comic books is less than half that. Now, I know some of you guys hate me for that. You're going to come here. You're going to thumbs down the video. Sean's picking on comic books. Hear me out. The most valuable comic book right now is an Action Comics 1, and it recently sold for a little over $3 million. Now, I predict right now if an Action Comics 1 in 9.0 condition came up for bid, it would probably go near $4 to $5 million at present time. There are rare coins that sell for over $10 million a piece. And when we talk about rare pieces of art, you guys know as well as I do, there are pieces of artwork that sell for hundreds of millions of dollars. So you have to understand, a lot of us have an emotional attachment to one collecting category over another. Market caps do not lie. I will be doing more videos on market caps and analyzing the size of certain collecting categories. The reason why I pull back from that is every time I talk about this, some little Poindexter in the comment section brings up, Sean, look at how many modern era video games are selling right now. That's a multi-billion-dollar business. Well, here's the problem with that analysis. The average person that's going to the store or downloading Super Smash Brothers on their Nintendo Switch, they are not video game collectors. Collectors are born. They are not made. Just because little Timmy S. Poindexter Jr. went to Target or went to Walmart or logged on to Amazon and bought a copy of Luigi's Mansion 3 does not mean he's a video game collector. It's just like when we talk about rare coins. When I tell you the market cap for rare coins is $3.5 to $4 billion per year, that does not include sales of modern era bullion coins. We are talking collectible investment grade coins only. This is a very important piece that a lot of the Timmies, Kimmies, and Poindexters do not understand. It's just like I had somebody come in the comment section and argue with me that modern era Magic the Gathering cards should be considered part of that market cap. The average person out there that is playing Magic the Gathering in the year 2021 is not always a collector. If you don't believe me, look at how quickly the player base rotates. And what I mean by that, the average Magic the Gathering player only stays in the market and or has interest in that game for literally 12 to 14 months. And this is taken from information I have gotten from Hasbro's quarterly report on the growth of Magic the Gathering. And this is also something that other YouTubers like Rudy with Alpha Investments have commented on in the past. You have to understand that just because somebody is buying Pokemon cards or modern era sports cards, it does not mean that they are a collector and are going to go after the vintage stuff or are going to stay involved in that market for decades on end. Collectors are born, they are not made. More on that in another video. Next question. This is a long question. I am going to read it in full, then I will answer it. Sean, After watching your videos, I wanted to start putting my money into traditional assets, stock market funds, hopefully real estate later down the line. I speculate into modern day basketball and football cards, also vintage Pokemon. I love sports cards and Pokemon, but want to start putting my money in traditional assets that are going to pay me back with less work and less volatility. You are 100% wise in that assessment. I started putting money in a Vanguard Total Stock Market Index Fund and reinvesting all dividends back into my fund. I'm a beginner in the stock market with only having my 401k at work as my other investment option. What traditional assets should I be putting my money into to gain long-term wealth? Are there better funds than the Vanguard Total Stock Market Index Fund? Should I save up my cash to buy a real estate rental? I'm 27 and I rent a one-bedroom apartment as of right now. Sorry for the short novel. I appreciate your videos and hope to hear back. Okay, since you are 27 and you rent a one-bedroom apartment, I'm sorry to say you should not get involved in renting real estate. Your next step is to buy, if you choose to stay in the area of which you live, a house. Meaning you should not be living in a rental property and then buy real estate to rent out. Your next jump is to buy a house so that you understand property maintenance and home ownership. This is a very big key. It's something that a lot of you guys are missing because I have people that are coming to me, Sean, I rent a 2-bedroom apartment. I'm ready to buy my first property. And I'm like, great. What type of house are you buying to move into? And they're like, no, you don't understand. I'm renting it out. And I scratch my head and I say, your first step should be home ownership for yourself. Then after you get established as a homeowner, then you buy a property to rent out. You're kind of working in reverse. So what I would tell you is, I would tell you to get more involved in traditional asset investing and also save up for the down payment of a house. Purchase a house, then you will be in a better position to explore other asset classes and possibly a real estate purchase as a home to rent out on the secondary market. So that would be your next step, in my opinion. Now, what I will tell you is you can diversify. I mean, I don't know how much money you're putting into a Vanguard Total Stock Market Index Fund, but you could also add, if you want to add some type of international stock fund, like the Vanguard International Stock Index Fund. You could also even add, theoretically, a Vanguard 500 Index Fund. It just depends on what type of risk you are comfortable with taking. Are you comfortable investing all your money in stocks? So that's why I will tell you to try to look at this from the standpoint of, okay, you're already going into the stock market. Your next step is possibly going to be to save money to purchase a house of some type. So you may want to add just a money market account next to the Vanguard Total Stock Market Index Fund. So you can put money into the money market account. Then when you get enough for a down payment, you can go and purchase your first major home or your first piece of real estate. So that's what I would guide you for in that. Excellent question. Sean, congrats on 6,000 subscribers. Could you do a general investing video? You mentioned having 100,000 plus in finance assets before getting into the collectible space. It would be great hearing your views on that area too. Let me rectify that. I think that you should be financially established with $100,000 before you start to seriously invest in antiques and collectibles over the long term. That's true. Now, if you want to speculate on some of these items along the way while you are building your nest egg up, I have no problem with that. The problem is there's too many Timmys, Kimmys, and Poindexters out there that get too carried away and they put all their money in antiques and collectibles. And because they have an emotional attachment to these items, they consider everything they buy to be an investment without understanding opportunity cost, without understanding other asset classes that are out there that may be better for them overall than the antiques and collectibles trade. And to be fair, they don't understand how these markets work over the short term or over the long term. So I will be doing more videos on this as we go along. I will tell you, I have done some videos on traditional asset investing, and they are available for viewing. Just look up my YouTube channel under YouTube and search through my previous videos, and you will find them. More videos on traditional asset investing are coming, so please stay tuned. Next question. Congrats and thanks for all the info you share. If you had to park $1,000 in collectibles or physical gold for an intermediate term, say 10 years or more, where would you put it currently? Okay, with $1,000, you're really not going to be able to put a dent in any type of collecting category that is on the sophisticated side of the trade. So if you tell me you only have $1,000 to invest, rare coins are out, rare pieces of currency in most cases are out, even certain really established vintage sports cards, certain comic books are even out of the equation. So with you only having $1,000, you are limited to what you can invest in. So if that's the case, I would tell you, you guys are going to hate my answer on this, go after vintage Magic the Gathering cards, vintage Pokemon cards, and the like. Because $1,000 can go a long way in that market. Or if you want to speculate on some of the newer Magic the Gathering sets, you could do that with $1,000. But I would not invest $1,000 in modern era Magic the Gathering cards and keep it there for 10 years or more. Really, if you would go after like Zendikar Rising collector boxes or Ikoria collector boxes or even Throne of Eldraine collector boxes, what I would tell you to do the minute you can double your money, liquidate the collection and take the profit and start putting it in something else. $1,000 is not a lot of money. Now, I did do a video on this. I did do a video on investing and speculating in antiques and collectibles on nothing more than $1,000 in a dream. And in that video, I go into detail where I talk about Lego, I talk about amiibos, I talk about certain modern era video games that you can speculate on. That may be the video for you to watch so that you can really see what I recommend when you're dealing with a low dollar amount. And really, you're going to be speculating. You're not going to be investing on $1,000, not in the collectibles trade at this point. This is going to be all speculative items that you're going to be going after. And I'm sorry to give you that news, but to do anything, again, in any of the established markets, you're going to need thousands upon thousands of dollars just to go after one item that is known as being in quote-unquote investment grade. So whatever you want to do with that, I would not go after gold. I would not put $1,000 in gold and keep it there for 10 years. Most likely, if you did that, you'd be better off going into a Vanguard Total Stock Market Index Fund or even a S&P 500 Index Fund. Gold is notoriously a bad investment over the long term, especially if it is your only holding. If you're going to invest in gold, you use it as a diversification, meaning if you have 80 to 90% of your assets in stocks, bonds, mutual funds, ETFs, real estate, you can take the other 10 to 20% and you can diversify into gold, collectibles, and antiques, and even cryptocurrency if you're crazy and you so choose. And that way you'll have a hedge against what the overall financial markets are doing. I hope that makes sense. Next question. Sean, could you talk about when to buy and when to sell? Okay, this is a question that I would really need more specifics to answer this question entirely. Are we talking speculating? Are we talking investing? What type of market are we talking about? Are we talking about speculative collectibles, established collectibles, mature, sophisticated antiques collectibles? You got to give me more details. If you want, in the comment section below, if you ask this question, give me more details and I will be happy to answer. Otherwise, I'm just going to answer it this way. Always buy low and sell high. Good luck if you're trying to do that in the antiques and collectibles trade, because most of these markets do not work the way that you think they work. They are not equatable overall to stock investments, bond investments, mutual fund investments, and the like. The antiques and collectibles trade is much more risky, especially over the long term. I've said this before. Over the short term, the antiques and collectibles trade is very predictable. It doesn't take an idiot to realize that obviously I'm filming this video in May of 2021. I guarantee you in August of 2021, just a few short months from now, people are still going to be collecting modern era Magic the Gathering cards. They're still going to be speculating on video games, Pokemon. Now, if I said what's going to be popular in August of 2031, That's a different question entirely. Very few people can predict the future in the antiques and collectibles trade over the long term. Wall Street, it's completely inverse. If we look at Wall Street, I don't know what the S&P 500 index fund is going to end on next Tuesday at 4 p.m. when the markets close. But I do know, most likely, 10 years from now, in 2031, the S&P 500 index is going to be higher than what it's at today. And that's why I choose to invest long-term in financial markets rather than putting all my money in antiques and collectibles. That's why I tell you guys, a lot of the Timmys, Kimmys, and Poindexters out there, they're attempting to invest in reverse, not realizing these markets do not work that way. That's why smart, sophisticated investors diversify into the antiques and collectibles trade. They don't put everything they have in the antiques and collectibles trade because the antiques and collectibles trade usually works opposite of that of the financial markets. Again, 2020, 2019 with the Corona crash, that's a separate beast entirely. So I hope that helps. This concludes part 4 of the 6,000 subscriber Q&A. Rest assured, part 5 will be uploaded soon. Thanks, guys, and have a great night.